What kind of screen are y'all seeing right now? Okay, Casey's sharing it. Okay, good deal. Okay, I'm going to go ahead and introduce our next speaker, who is Dr. David Anderson, and he is a professor and extension economist with AgriLife Extension Service. And so he's going to give us a quick cattle market update, which I'm sure that you all are very interested in. So are you there, Dr. Anderson?
Hey, I'm here.
Good deal. If you want to share your screen, you can do that.
Sounds good. Let's see. I'll turn the video off, share the screen. Continue. Hey, can you guys see that?
Yes, we can.
All right. We're cooking with gas then. Thank you very much for inviting me. It's great to be with you all today. And you know, it's hard to know where to start sometimes talking about the cattle market and all the effects we've got going on through what I've just around the house been calling the Rona. So I went ahead and called that my title. We're going to talk about the impact of the Rona on cattle markets. Let's jump. I'm going to jump right in. You know, in some ways, we talk a lot. You know, you see lots of little restaurants around, particularly in, you know, in some cities, talking about farm to table. You know, they got a farm they're getting some stuff from, the, you know, the dining like in a farm to table type thing. And, you know, in a lot of ways, I've sort of just taken that and twisted it around, because a lot of the effects of coronavirus really, you know, are sort of going from table to farm. And I want to spend our time, this time this morning, talking about, you know, how we're adjusting. How is the market adjusting to this, and then where to from here? You know, when I put all this stuff together, we will get down to the end, and I'll show you my cattle prices, where I expect prices to go the rest of the year, based on kind of a fundamental look at supply and demand. And hopefully by this time, well, I'll point out places where I think we have a lot of uncertainty about where things are going. But you know, that's sort of what I got in mind to go this way with it. And I want to talk, kind of set this up a little bit. You know, we're really, you know, times are not normal, and we shouldn't really expect cattle markets to be normal. Cattle markets are reflecting these not normal times we're going through, whether it's, you know, restaurants closing their dining rooms, social distancing, trying to reopen now, huge amounts of volatility and uncertainty. It starts with the shift from restaurants to grocery stores. Then we roll through packing plant closures and slowdowns. And so really these are, you know, they're not normal times yet. You know, I would tell you as an economist, some of the impacts we're seeing are exactly what we should expect based on some of the changes that are happening. So, you know, I'll point some of those out as we go along the way. There's some keys, and I'll come back to these, you know, periodically. One is lots of volatility, lots of uncertainty in our market, just because of these uncharted waters. I think we're going to talk a lot about in incoming months recession, and recession or worse, really changing purchases, not only orders by grocery stores and restaurants, but also consumer behavior, what we buy, what we have income to buy. So, you know, I think we've got, that's going to be a consideration. And the other thing I would say is that, you know, these effects are going to ripple through the market for a long time. What starts with a lot of retail closing down, folks, you know, when restaurants shut, folks are going to be working from home or whatever, staying at home. In different parts of the country, the orders are different. But, you know, that stampede at the grocery stores, clearing out the meat case and some other cases too. But, you know, that kicks off a whole set of ripples going through. Then we get packing plant issues. We back up cattle, we get weights, we've got price pressures. Yet at the very end, you know, there's some fundamental things we might talk about too that I think will come out of this, and that is some short-term versus some long-term effects. So that's where I'm headed with this talk, and I'm going to show you just a bunch of charts really focusing on adjustments. What adjustments are we seeing? You know, we might see a lot of stories in the on the news at night about this is happening or that happening. Let's take a look at what the data is telling us for how these adjustments are happening in the cattle market. So first thing I think I would show you is the number of cattle we are sending to market. And by market, I mean cattle going to slaughter. This is all cattle, fed steers and heifers, cull cows, bulls. And there's a couple things I want to point out here. One is if we looked at the first 3 months of the year, we moved a lot of cattle to market. In fact, that has helped us a little bit because we slaughtered so many cattle in March. It gave us a little room in feedlots for what's happened since then. So, we moved a lot of cattle, well in advance of a year ago. I'm going to use this same color kind of scheme in my charts where that fat red line is a 5-year average. The dotted line is 2019 and the solid blue line is this year. So, I mean, my gosh, take a look at that decline in cattle slaughter. We went from a peak of 685,000 head per week. We got clear down to about 420,000 head. So, and in fact, a couple of weeks ago, really at the trough, or we might say the peak of plant closures and slowdowns, we had fed cattle slaughter at 50,000 head per day, which was down more than 40% from back in earlier this year, or even compared to a year ago. We were in excess of 40% declines in cattle slaughter. I think the point about where we're adjusting is if you see that uptick in slaughter, we're starting to see things loosen a little bit. We think about this packing plant thing as a log jam, or I've described to some other people as, you go put your thumb on the end of your garden hose or put a kink in the hose, you build up a bunch of pressure on the back end of the spigot, and you can shoot some water a long way. It's that backlog that is resulting in changing fed cattle prices, and it's affecting our calf market, yet also showing this spike in wholesale beef prices. So what we're seeing here is a little bit of loosening of that kink in the hose, or loosening of the log jam, really, as I think we have some evidence that packing plants are figuring out how to manage under this. We've got some plants opening. Practically all plants are running slower, but we've got some adjustment going on that's loosening it up a little bit. I think we're going to be hard pressed to get back to where we were, simply because of the slowing of line speeds in plants, but we're starting to see some move in the right direction. I think we'll continue to see that loosen up, where we can see some advancement in cattle slaughter, because we certainly do have a backlog going on, just simply because you're going to curtail slaughter that much. Those animals are still sitting in feedlots and eating. And so we are developing a backlog of cattle, but we've got a little bit of loosening going on, and I think that's really a positive. I think one way to think about adjustments is by looking at how many cattle we slaughter on Saturdays. Typically, we might think about, broadly speaking, on the packing side of things, Monday through Friday are full days, all out, the shifts you got running. Saturdays are often, we might think of sort of a half day or a day where you still have some more cattle to run through. You're sort of cleaning up those animals, finishing up for the week. There are plants that are a little different schedule, where Monday is their sort of half day, where we have some different timing and schedule of things. But I think one of the ways we're seeing some adjustment is if we're spreading out animals, we're running slower. One way we might see some adjustment is continuing to run on Saturdays. And, there's not a whole lot of difference here compared to a year ago in terms, over the last couple of months in terms of Saturday slaughter. We had some big Saturdays back in March, just simply to process all the cattle that were moving to packing plants. But, I think this is sort of an effective picture to get us to sort of think about maybe how all we might adjust. And I think those adjustments are going on. And so I thought that was worth taking a pic, showing this data to just kind of think about how do we adjust and what adjustments are happening. I think that's one of them going on. We talk about if we're not moving cattle to packing plants, they're still in a feedlot and eating. We think a lot about a backlog of animals, which should tell us that weights are going up. Well, it's pretty clear we have a seasonal pattern in fed cattle dressed weights. If we look at so far this year, the last couple of weeks, we are seeing an uptick in weights, in dressed weights. But throughout this year, we've had weights well in excess of a year ago. And if we look at the data for last week, we went from about 890 pounds per head steer dressed weights up from about pretty close to 855. So, that's a large year over year change in weights, but I think it's indicative of what we ought to expect to see, that we start seeing some weights begin to grow. Normally, we would think of that being really a disaster for prices, because it just shows more and more pounds of beef on the market. Yet with this shortfall in cattle going to slaughter, I think that alleviates some of those concerns a little bit. We may certainly have problems with overfinishing, but this should result in some more pounds, total pounds. Might be a little more fat too, but some more pounds of beef on our market just when, maybe these pounds are going to help us. Again, if we look at beef production, really just, the number of cattle we slaughter times their weight, lo and behold, we got beef production that looks a heck of a lot like that cattle slaughter chart. I would point out in March, we actually produced 11% more beef in March than we did in March of a year ago, but certainly dropping from that peak at just over 550 million pounds a week down to 350 million pounds. There's no escaping that we got pretty tight supplies of beef. And if you go to the grocery store, you may be seeing some of those effects with certainly less volume at your store, maybe less variety. I think we've also got, as restaurants begin to reopen, some of them having difficulty getting supplies. I'll show some charts about wholesale beef prices in a little bit, but I think it highlights the picture. Why are we seeing tighter supplies? Why are we seeing at the store what we're seeing? And it's pretty clear if you're going to cut beef production this much, boy, there's going to be less at where we buy at retail as consumers. So I think that's, again, a pretty good picture of just getting the magnitude in our minds of what's happening. And certainly some loosening up in the last week or two, where that log jam loosens a little bit, we can get a little more beef production. And so that's, I think, an effective picture to kind of think about that. So I mentioned we got these ripples going through the system. Another one of these is cattle on feed. With the log jam at packing plant, we slaughter fewer animals. The next step is what happens at feedlots. We certainly see changes happening there. So the April cattle on feed report indicated that feeders placed 23% fewer cattle. We had that big marketing in March, cattle going to slaughter, but it ended up pulling down cattle on feed by 5% or 5 percentage points compared to the year before. So a pretty drastic change in cattle on feed. Again, that rippling effect, how are we adjusting? If we have fewer cattle on feed, if we have fewer placements, it means those animals are staying out in the country. One of the things I think we know for sure is those cattle are going to come to feedlots. Next Friday, USDA is going to release their next cattle on feed report. I do some pre-report estimates, one of a number of analysts that do that. I think we're going to have placements down. In my estimates, placements ought to be down about 20%. Marketings were down 25% compared to a year ago. Leaves us with cattle on feed of about 5% below a year ago again. So again, fewer placements during April, way fewer marketings, but cattle on feed remaining lower than a year ago. My expectation going out a little further as we get into May, I think we're going to see placements jump in May as wheat pasture cattle that were on graze out programs are headed to market. The cattle that were kept out in the country, whether backgrounders or out on pastures, some of those are going to be heading to feedlots as well. So I think You know, what we've seen for a couple of months of sharply lower placements may start to change as those animals start moving. So, you know, I show this as really the next round of ripples going through our market. Let's jump into a couple of cattle prices. Again, you know, gosh, we look at fed cattle prices. Certainly earlier this year, you know, in February and March, we began to see much lower prices than we had a year ago. You know, the year before, back then, we were up over 125. We dropped as low as about 108 in March. Remember, we slaughtered more than 6% more fed cattle. We produced 11% more beef in March than we did the March the year before. So, you know, lower prices before the effects of coronavirus really hit us. We already had lower prices, really driven by more production. You can see that spike in prices really responding to all of us consumers stampeding grocery stores and cleaning out the meat case as we shifted from restaurants to grocery stores. It's a sort of a commonly cited statistic that generally, you know, prior to this, we were getting about half of our food away from home and half at home. The away from home part are restaurants. The at home is grocery stores that we buy and bring home and cook ourselves. So, you know, that shifting from one supply chain to the other, if you will, or one stream going to restaurants, trying to get that moved over to grocery stores that had planned their purchases 6 weeks before and didn't anticipate coronavirus hitting us and all of us consumers buying everything in sight. We got that little spike up in fed cattle almost to 120, and then the decline hits us as the packing plants slow down and closures occur. You know, if you think about packing plant, you know, what they are buying are fed cattle. When they're not buying, that demand for cattle declines, and so price goes down. On the other side, they're supplying beef. And if they're not processing any cattle, they're not supplying any beef. So we get this loss in demand on the live animal side and a loss of supply on the meat side. And that's exactly what's going on. What I'd like to point out in terms of adjustments is we're seeing over the last couple of weeks a rebound in fed cattle prices. Earlier this week, some fed cattle moved at $1.15. And it puts it right on par with where we were a year ago. You know, the problem is if your cattle got bought and went at 115, fantastic. It could have been worse. But with that curtailment in moving cattle through packing plants, there's a lot of cattle standing there that didn't get sold. And those are going to be there for a while as we continue to work through this whole backlog, log jam, whatever we want to call this thing. But we are seeing, I think I really wanted to point out that, you know, we're seeing some loosening up of this problem going forward. And I think that's a positive move. And I certainly think we're going to figure out ways to continue to loosen this log jam. And I think that's going to help our prices. You know, I said, you know, we get skyrocketing meat prices because we've lost supplies of meat. This is the boxed beef cutout for choice, USDA choice beef. You know, when I see a graph that looks like this, I start looking for who put a typo in the data. And usually that person's me. So, but this is not a typo. When we talk about record wholesale beef prices, this is what we've basically been talking about. Just a skyrocketing of wholesale beef prices. This is, again, the cutout value, a weekly average value. I could have pulled some days over the last few days, and we were over 450 for some days, and we were setting new record values from morning to afternoon and starting again the next morning over about a 2-week period. By far record values. Earlier this week, we started seeing some daily cutout values begin to decline. Really, I think reflecting that some loosening up in the log jam, a few more supplies, grocery stores, restaurants, whatnot, getting some of those supplies, what the limited supplies figured out, and they were backing off a little bit from those records. You know, I would point out something else too, and that is, as we begin to reopen our economy, restaurants get their dining rooms back open. Those folks with all the struggles they have had are reopening right in the middle of these by far record high doubling of wholesale beef prices. And in some cases, for some cuts, more than doubling from before the coronavirus hit us. This is like a, double whammy isn't big enough number. It's like a triple whammy on our restaurants as they try to reopen and face these kinds of input prices. So, I think that's worth thinking about some of these adjustments going forward also. Calf prices, again, pressured by, sooner or later a feedlot or a feeder is buying our calves. And so we certainly see the effects, I think, of those, of what's happening there, which is why I spent so much time on that, rippling through to our calf market. Yet in the last week, we started to see some increase in calf prices. I think that's been fairly common at our local auction markets, really across the state, where we've seen a lot of steady to higher kind of generalizations of the market, certainly some higher prices. And I think that's reflecting what we're seeing farther up the chain from us, but that's what's given us a little bit better prices. Feeder cattle doing the same thing. I think, in the last week or two, we have seen reports of, you look at some of the auctions in other parts of the country, whether it's Oklahoma City, some stuff higher up in the plains, starting to see some pretty big runs of cattle moving, and those cattle would be headed to feedlots. And we're also seeing some strengthening of prices. I think one of the things that's supportive of that strengthening of prices is we're seeing some higher cash prices being paid for cattle. As things loosen up, we're seeing some higher prices there. Some of that's been reflected in futures markets as well, but a little bit of hope there in terms of placing some cattle, and I think it's reflected right there in our heavier weight feeder steer prices as well. I'm going to show about 3 charts from the meat market just for fun, and I'm going to start with wholesale ribeyes to just kind of show these effects going on. With that stampede at the grocery store when restaurants first started closing, we actually saw an uptick in ribeye prices. Grocery stores trying to restock their shelves. And then we saw this sharp decline in ribeye prices. And there's a couple of things going on. One is this supply and demand of those for stores. The other thing going on is, if you're a grocery store chain, wherever in the country you happen to be, one of the things that's going on is them thinking about stocking supplies in the face of a recession. We learned in the Great Recession, now 12 years ago, 12 years ago, people still bought beef, but they bought fewer steaks and more hamburger. So if you're thinking about stocking your shelves, if you're the meat buyer, you're looking at it and think, you know what, we need to prepare for what consumers buy in a recession. I need fewer steaks, and I need a heck of a lot more hamburger. And so the ribeye prices reflect that kind of buying and that decline. Yet then we hit packing plants closing, and we got this sharp decline in beef production, and we shoot ribeyes up, wholesale ribeye prices up, pushing almost doubling, going from about $6 a pound to almost $12 a pound at wholesale, really driven by supplies. And we're almost to Memorial Day and kind of the kickoff of the summer grilling season. So if you're going to sell any steaks at all, you might want them on the shelf then. And so we've got this super tight supplies just when we might actually have some demand for the product too. So that's why we see this up and down in something like ribeyes, the middle meat, steaks, those high value, great things we all love, compared to a chuck, the wholesale chuck. Well, chucks, we do a lot of stuff with those. We make roasts, flat iron steaks. We grind a lot of them into hamburgers. So if all of a sudden stores need more ground beef, there's a heck of a lot of demand built in at wholesale for chucks to grind. And so we see, my gosh, look at this at wholesale. We went from, $2.60 to almost $6.40 a pound, or dollars per hundredweight in the chuck. So it's, a different dynamic there because between stuff that might be going to ground beef and stuff that's going to steaks. The last one I'll show you is just 90% lean, boneless beef. This is lean beef we're going to make hamburgers out of, and we're going to try to fit into whatever type of hamburger you like, to ground beef you buy at the store. 27% or excuse me, 73-27 in lean to fat ratio. I got tongue tied. 80-20, 90-10, all of those things you see. We've certainly seen prices spike for this 90% lean. And I show that because, that's where our cull cows are going. Our cull cows are going, a lot of that really lean beef is ground into ground beef or hamburger. And so as we look at our cow prices, we've tended in the last couple of weeks to have cow prices a little above a year ago, supported by what's going on in the ground beef market in that 90% lean and things like that. So I think that's helping us on the cull cow side, where those prices have been a lot closer to a year ago or above, when our calf prices have been lower. Now, I'm going to say a couple things about trade real fast just to do it. Our imports, the data that we have goes through March. We have actually imported a little more beef. And, most of what we import are about 70% are trimmings to turn into ground beef. We also import, the rest is stuff like muscle cuts, steaks or whatever, various cuts. So one of the things that we'll see going on in terms of imports going forward is our prices for meat are at record highs. That makes our market pretty attractive if you were a business in another country looking to export some beef. We have pretty attractive prices for imports. We also have our own companies that are looking for beef supplies because we're not producing enough of it, and they're going to get some supplies for there. I think we may very well see pretty strong imports, really driven by our high domestic prices for beef. That's pulling some more imports into our market. Really driven by a relatively strong dollar and really high domestic beef prices. On the export side, through the data so far, we've had some pretty darn good exports. When we get the data for April, I think it's going to be pretty interesting. Can our exports maintain this pace with sharp declines in production and sharply higher prices? I think it's going to be hard to maintain our export pace simply because we'll be a little less competitive out there in other markets. So I think it's going to be pretty interesting to see this relative trade situation going forward, really driven by our prices and our production. So, I thought I'd put those in just to look at, again, another source of adjustments in our marketplace that are really trade driven. So put all that together, fundamentally supply and demand, we think about where we're going. That's, that sort of is the point of all of these things. So I'll tell you what, here are my prices going forward. On my far right, 5 to 6s. So those are our calf prices, heavier feeder cattle, fed cattle, just for completeness. Down there at the bottom is our this year's prices by quarter. And I'm going to highlight a couple of those. Gosh, if I look down that lower right-hand corner of this chart for my calf prices in the second half of the year, particularly the fourth quarter of the year, calf prices this fall, I think there still remains some good reasons to think about that we may very well have better calf prices this fall than last year. If I look at this fall's prices, I think one is we have fewer cows in the U.S. this year than we did last year. Our cattle cycle is tipping over to fewer animals, which means, one, we're going to have fewer calves on the market this fall. I think another thing that is supportive of the market this fall is USDA reports that farmers have told them they are going to plant huge numbers of acres of corn this year. We get any kind of normal, regular yields, and we're going to have a record crop this year. And with that record crop's going to come lower prices. So I think we're looking and set up for a situation, at least at now, where we might be looking at lower feed costs for feeders who are going to buy our calves, as well as fewer calves on the market, which even with all this turmoil, and I'll say a third thing, plus a little bit of time for this turmoil to sort of continue to shake out and we see where we go. But I think there's some good foundational basic supply demand reasons to expect some better calf prices this fall than last year. And so, with that, I think that's the one thing I would really highlight there on that chart. And heck, after that, I think I just have two more charts, and this is the main one, is my contact information. If you get some question about something I've said, or you get to thinking about something, shoot me an email. There's my email at the top. It's just pretty simple, danderson@tamu.edu. They got us all working from home, so my phone number down there at the bottom is my office number, so that probably isn't going to do any of us any good. So the best way to catch me is probably send me an email. But I would certainly love to hear from you if you got some questions or comments or something I didn't make any sense on. I would certainly look forward to hearing from you in the future. And I think my last slide is just a big old thank you. I appreciate the opportunity to be with you all today. Thanks for inviting me. I think we've got we got a lot of big issues on the cattle side of things to work through, a lot of policy issues, a lot of things that this turmoil has brought to the fore. And so there's a lot of stuff to talk about beyond where we've stuck today. So I certainly thank you for your time. I'm going to go back to this price one and just leave that there. I guess I will, I'll leave it to you. Brian, you want me to stop sharing my screen and we'll just take some questions, or does that work for you guys?
That works for us. If you guys have any questions, you can feel free to shoot those questions in the little chat box at the bottom.